The S&P 500 just hit the 100th percentile, and the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface and the data confirms it. Right now, 10-year yield is at 4.45%, the 91st percentile for the past year. Historically, the 10-year at this level reprices every leveraged asset in the economy. Snider says the eurodollar system is tightening and nobody sees it. The data says gold rose 2.1% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst's commodity supercycle call is paying off. Oil at $87.4 and trending their direction. 162-day streak, score 1 for gammon. Credit will blow out. Investment grade spread agrees at 73 basis points. 4 days running, the volatility expert called it. Volatility expert called it. Volatility expansion. VIX at 15.7 confirms it. 3 days running. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 161-day streak, Hartman might be right, but the data has not confirmed the thesis yet. 155-day streak, the dollar analyst call is not working. For now, gold moving against the bearish thesis, up 2.1%. 3 days running, Snider just moved from right to wrong. Bad stretch for Snider, for now. Yield curve at 0.47% says the opposite of dollar liquidity crisis. Score today, 3 right, 2 early, 2 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, is the dollar about to surge, or is it topping out? Snider says the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast, and it is a clean narrative. But here's the problem. Gold rose 2.1% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here's what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 98.9, 65th percentile, down 0.1% today. Gold at $4,593, 70th percentile, up 2.1% today. Bitcoin at about $74,000, 27th percentile. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 98.9. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 98.9 will track it daily on the scoreboard. Gold at $4,593. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here's how close we are to the edge. We are 77 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 73 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CFNAI flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 77 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. NC, days on market, is collapsing in Charlotte. Days on market in Charlotte moved 99% in 30 days, now 36 days. Buyer leverage score 36,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. HI, days on market, is spiking in Hilo. Days on market in Hilo moved plus 98% in 30 days, now 206 days. Buyer leverage score 82,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Marin, CA, payment burden is past the breaking point. Bolinas, CA, median home about $1,915,000 on about $96,000 household income. Price-to-income ratio, 19.9. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge, or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $74,000, the 27th percentile, notable but not extreme. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, gold at $4,593 is in the 70th percentile. The last time both Bitcoin and gold were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Stay alert on VIX. It is dropping 3.4% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds. No alarms. But the runway at 77 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. The talking heads give you opinions. We give you the numbers. We give you the numbers. Subscribe, and I will see you tomorrow morning with a fresh scoreboard.